Good morning, traders. It's the 6th of January. We are Signal Centre talking bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve. How are you?
Very good, thanks, mate. Yeah, I can't believe it's Friday already. It seems to have
I
gone very
know.
quick this week with that Monday bank holiday, and it's
Yes,
non-farm Friday. What a
it is
happy
non-farm
day that
Friday.
always is.
It's come round again. Yeah, always a big event, always brings with it volatility. So could be an interesting day, that's for sure. So let's get into the latest headlines ahead of the non-farm payrolls, and then we'll go into obviously some detail around that and talk about how things are shaping up in front of it. So in terms of the latest headlines, first up, we had strong ADP jobs data yesterday. We saw an increase in the private sector payrolls to 235,000 for December, which was well above the consensus forecast of 150,000. And the November increase was also revised higher to 182,000 from the original estimates of 127,000. There was notable differences between sectors, with a dip in manufacturing and trade and financial services jobs, and there was also a net cut in employment within large companies, with firm growth in smaller companies. We saw the jobless claims decline as well. The initial jobless claims declined to 204,000 in the latest week from a revised number of 223,000 previously, and again below the consensus forecast of 225,000. So that was pretty good. The Fed expectations were also revised higher. Following the stronger than expected US employment data, there was a shift in Fed futures, with markets raising the estimates of the terminal rate to 5.07 from around 2.95% at the beginning of the week. So that's a pretty dramatic rise. Is that supposed to be 3.07? That seems massive. Net yields on the US yields rose higher on the back of that. We saw significant dollar gains yesterday. They posted a big move to the upside. The stronger than expected data and higher yields triggered a renewed US dollar support, with the US currency also gaining net support on defensive grounds as equities moved lower. The yen was also subject to renewed selling pressure after the US data. In Europe, we did see some weak German data. The German industrial orders declined 5.3% for November after a 0.6% increase for October, and well above the expectations of 0.5% decline. And today it's the non-farm payrolls, as we've already mentioned. The latest report will be released on Friday, with expectations of an increase in non-farm payrolls of close to 200,000, with the unemployment rate holding at 3.7%. The data on wages will also be important for the underlying inflation and Fed policy expectations. So let's get into some charts ahead of that, Steve, and see how things are shaping up, shall we?
Absolutely, Joe. Let's take a look at Bitcoin first. Again, nothing really changed in Bitcoin. It's been quite a flat couple of months, really. And this week hasn't been any different. We've managed to gains have managed to were capped yesterday. Very muted day yesterday, as you can see on this daily chart. Wednesday's sort of like a big rally. We've held around those levels, but we are above the 55-day moving average, or trading around there. So, and moving into the weekend, obviously Bitcoin trades over the weekend, so it's sort of left to his own devices, I think, from there. But at the moment, we're posting higher lows, so that looks a bit constructive. We need to get above resistance, just above 17,000 to open up the upside and maybe challenge the 100-day moving average sometime next week. 18,000 upwards is the next level of resistance. After that, there's not really much in between. Taking a look at commodities, look at gold on the daily chart. Yesterday was a bit of a sort of like a weak day for gold. We sort of like highlighted it early doors on the charts that we were getting a little bit of a turnaround overnight, and that continued lower. Bearish engulfing candle that's posted. Although this morning we have had a little bit of a pullback. We've got down to 1821, which was a previous resistance level. We can look back here on the 13th of December, also on the 21st of December, and we seem to have sort of stalled around there, 1825, and bounced high from there, 1838 trading. So still overall a positive structure on gold. But you know, we got that little pullback that probably the market was due after quite a exponential type of rally from the right shoulder. Silver, similar sort of price action. although it's been a little bit weaker than gold over the last couple of days, but it has had this great rally for the right shoulder, and that can't really be sustained for too long. And we have had a little bit of a pullback, got down to around about the 23.12 level. Support coming in at 22.57, all the way down really 22.27 after that. But again, this morning we've got off to a little bit more of a positive start. This is all really driven by dollar. Joe will run through the dollar in a moment. We actually closed on the 200-day moving average in copper yesterday. A really nice bullish engulfing candle. See it here, this nice positive green candle. And it was probably the move I was looking for the day before, actually, when I was saying call a copper. It's starting to project a little bit higher now, so a little bit more constructive, looking for a bit of a golden cross to form if we maintain this positive price action. Resistance on the charts anywhere between really the 386 level and the 396 level, and really need to get prices above there to really open up the upside from this double bottom formation that we're forming. Crude oil held steady yesterday after a couple of tumultuous days to the downside. We have posted a lower low compared to the 16th of December swing low that we had. We are below there. A bit of a doji candle, so a bit of a stall after such an aggressive move down this week. On the back foot again this morning, had a little attempted rally to try and get up above yesterday's high around $75. That's failed, so we're probably now looking to target 72.66 to the downside on WTI crude oil. Same sort of price formations in Brent crude oil, although it does trade at a premium. It's trading around about a $5 premium to WTI. Again, yesterday made a new low around about 77.70. We didn't manage today. We'll be sort of like trying to push, or the bulls will be trying to push us above $80. A little bit of a psychological level, but that's going to be quite tough at the moment on the back foot, as we can see from this chart. And finally, on the commodity side, natural gas, we're right on this really important support level. Managed to get down there yesterday. We can go all the way back to December 2021, really, for the last time we visited these levels. We've still got this quite decent gap on the charts above in natural gas. So I am expecting some sort of pullback to fill that before we do get any sort of like real break to the downside. But it is under pressure. There's nothing you can say about it. The 350 level managing to hold firm at the moment. A break of 350 does open up the downside, but you can see from all the way back, even in October 2020, all the way to the end of the year in 2020, we've got this big level of support that we expect to see if prices do break down below that level. However, remember this I think it's a double top formation or the head and shoulders formation, whatever we measured from here, is a targeting a move to 135.5. That seems like a long way off, but you never know in these markets. Yeah, natural gas on the back foot into the weekend. It's nice to see, but maybe a little bit late for my energy bills. Let's take a look at the FX now, Joe.
Yeah, sure. Let's do that. Let's take a look at dollar index to start with then. So decent day yesterday, continues to extend higher from this wedge pattern that we've identified on the daily chart. So appears to be in corrective mode, pushing to the upside. We could argue that we're actually finding some resistance at the neckline here. So officially the neckline is an upward sloping one, but I always prefer the horizontal line. So I'd go by this level here being the kind of neckline that I was most interested in. And that candle there on the 1st of December was the one that really confirmed this move for me and the completion of the top pattern. So we may be running into that in a minute and finding some resistance. Obviously, it's going to be a challenging day. There is going to be lots of volatility with regards to the non-farm payrolls and the ISM data, and also the inflation data that we've got due out in Europe in a couple of hours or so. So for me, while we've broken out of this wedge, I still think there is potential for higher prices. If we take a look at the fib levels from the head down to the most recent lows, we've got a 38.2% fib level, which also marries up with these previous lows in this region here. So for me, that is where ultimately I believe this correction could get to. So I am still on the positive side of dollar at the moment, still thinking we could see some higher prices. Yes, we may see some volatility, we may see some pullbacks temporarily, but I think that there appears to be some good feeling towards the US dollar at the minute, and we are likely to see a decent correction higher. But of course, we do have this head and shoulders top pattern, so therefore I do believe that the overall bias over the medium term is maybe still bearish, and we can still expect to see lower prices. But in the very short term, I am looking for a corrective move higher. Let's take a look at Euro US dollar. That had some interesting price action yesterday. Looks to me as though it's formed a small top. We saw this candle on the 3rd of January where we broke down through this minor level of support that we had at 105.75. We saw a retest of that level on the 4th, but yesterday we posted a bearish engulfing candle. We engulfed all of the gains that we saw in the previous session and closed at a new low in the short term. So for me, it looks like we have formed a short-term top here on Euro US dollar. And for me, the bias is for lower prices in the very short term, a corrective move lower, potentially down to this region here at around 103.50. So looking at that in isolation, looks as though we might be in for a bit of a turnaround in the short term. Let's take a look at cable. Similar kind of situation. We rallied into some major resistance here at 124.30. We posted a bearish engulfing candle yesterday. We made new relative lows in the short term. And for me, again, it looks as though we may be in the process of a correction, pulling back potentially as low as 116.45. Let's take a look at some of the yen currency, shall we? So this is US dollar Japanese yen. So we talked about this bearish channel, which has been containing prices for a while now. We saw prices stall around about these lows, posting a swing low failure. We posted this bullish candle here, this hammer candle, and since then prices have continued to move higher. So we are into some resistance at the minute. Yesterday we closed within the bearish channel, but today we're having a little bit of a look above it. So are we going to see some resistance here form at 134.50 and potentially send the prices lower? It seems to be a pretty solid level of resistance. So if we can get above that, then we may see a break of this channel and therefore a correction to the upside. And potentially as high as 137.63, but I think we need to get above this 134.50 level in the short term before we can start getting excited about that. Any requests on currencies that you've seen come in, Steve?
Let me just double check. I've got a little bit distracted there, mate. No, nothing on currencies, no.
Okay, well, we can come back to it if anybody's got any suggestions on things that they're looking at. There are a few interesting bits out there, but I don't want to keep banging on unless there's anything specific. I think it's just important to understand where the dollar is at the minute and how that's potentially shaping up. So, Steve, do you want to take a look at some indices for us?
Yeah, sure. I'll have a look at indices. Let me just switch over. Yeah, I'm going to start with FTSE. One of the things I just thought you mentioned at the start of the show, Joe, was the expectations. Was it the Fed expectations revised higher to 5.07?
Yeah, but I've had a look at the chart. I think it's supposed to be 4.07.
Yeah.
I think there's a bit of a typo on there.
No. I think it's from 4.95 to 5.07. So yeah, it just said on the sheet that we got sent through, it had a typo on the 2.95% at the beginning of the week. We are expecting rates to get up towards that 5% level. So I think that was 4.95 at the start of the week. Now 5.07. Obviously, with these the jobless claims decline and the non-farm out today, a good figure today, and further evidence that maybe the sort of like jobs are being created, that would lead to sort of a decent rally in the dollar. But obviously, the worries about inflation will be front and center. So just thinking forward to our gun to head trade idea, this is going to be one of the horrible days, and yeah, it'll be full of volatility. We have to really sort of like try and nail this. It's always one of those days that I prefer not to trade on, but we can't do that. But anyway, let's carry on with the analysis on the indices. FTSE continued higher into this resistance level. As you remember, sort of like last year, we hit a high all the way up at 76.86. Sorry, that wasn't 76.86, 76.88. All the way back in February last year. And we're really, if you look at the chart, nothing much has changed, despite the fact we had this huge sell-off in October and March, obviously, from last year. So feels like nothing's changed, though. If you sort of like were, just transported yourself forward from last year, you'd think, oh, same old, same old. But it's not. It's had quite a volatile year last year in the indices, but FTSE obviously seems to be benefiting in some way. Obviously, the dollar does help because there's a lot of companies within the FTSE 100 that do have profits in dollars. So from a levels perspective, we expect resistance all the way up to that 76.88 level. Signs are pretty good so far. We've had like 5 or 6 days of positive price action. Nothing really looking to slow that down apart from previous resistance. So that's a little bit of a finger in the air moment. However, on the DAX yesterday, we did get a little bit of a stall in price action, maybe a sort of hanging man type candle, just a doji really, but like closed on lower than it opened yesterday. Yesterday or today we've had a little bit of a rally higher overnight, got up to 14,535. Can't remember where my stop was at yesterday. I would have been stopped out though if I'd have run that position overnight, and yeah, reversed quite sharply. Got down now, trading around about 14,417. So on the back foot this morning as we carry on into the market. So the indices I expect will have a little bit of a exciting day as well. Price action on the Dow yesterday was negative. We engulfed previous day's price action on Wednesday. We have stalled around at quite a decent resistance level now of 33,480 and reversing slightly lower. We're below the 55-day moving average, but we have had this golden cross form. So from a more medium-term outlook, this looks like a bit of a more positive sign just from the moving averages. But for me, I'm looking at this topping formation almost like a head and shoulders formation on the Dow 30. NASDAQ isn't performing as well. It's again another negative day yesterday. We're trading around support all the way from 10,600 all the way up to 10,700. A decent area of support from previous price action. You can see all the levels back in October and November, adding to what's going on there. Was that a spike down to 10,427? It was on that really exciting day, 13th of October, all the way back then. And yeah, so overall, this feels like we are on the back foot going into this Friday, and we should really take it on board. Same sort of price action in S&P, again on the back foot. Got the crossover of the 55 and 100-day moving average, but not really sort of anything to, price action is still below these two levels, so we are still in a negative trend overall, and I'd be a little bit cautious with indices today. Any others to look at? China seems to be performing well as it opens up its economy again, but I'm sure there's a lot more concerns over there. We're above the 200-day moving average though for the first time since July 2022. So positive for China 50 as it opens up. We've got an inverse head and shoulders formation that targets a move a lot higher, and yeah, but I'm still yet to be convinced by that. Hang Seng posted the hanging man candle yesterday. That's interesting, and we're on the back foot this morning, so a little bit negative as we continue into the European session. And Nikkei, which hasn't performed as well, has stalled at previous support level down at 25,600. And this morning we have clawed back yesterday's losses, so looking a little bit more positive, but still a lot of work to do on this downside. But overall, the actual candles themselves don't look too bad, but the risk is a break below 25,600 would open up the downside. That pretty much covers off all that, Joe.
Okay. We've got a couple of requests on FX that I'll come back to for Sam on TradingView. So thanks for your patience, Sam. Hopefully you're still watching. Let's take a look at those requests. So he was looking at dollar CAD to start with.
Sorry,
so
yeah,
take a look.
I've got to refresh
your screen.
chat.
Right.
Yeah,
no problem. Okay, so this is my daily chart on dollar CAD. So I was pretty convinced about this head and shoulders back at the time when it occurred, because it was a very neat looking one and played out and made all the kind of right noises. But then we saw this corrective move higher, prices moving higher within this bullish channel. If we just remove that from the chart for now, what we can see is that prices have been increasingly range bound for the last few weeks or so, really going back to kind of early December, and we can see prices continue to trade within this range. We have had some pretty impressive candles throughout this period. I mean, most notably this one, which basically does the whole range in an entire day. That was on the 4th of January. We can see prices stalled at the top end and then engulfed all of the previous day's gains to actually close actually below the lower end of the range. But then we saw this pullback yesterday, which looks to be around about 50% of the Marubozu candle that we posted on Wednesday, and we are trying to push higher again today. So on the daily, on an isolated chart on the daily, it looks pretty range bound for me at the moment. So I'm not sure there's any particular setup there that really appeals. If we take a look at this on the 4-hour chart, we can again just see this range that's ongoing at the moment. And yes, we did see a failure. We saw that reversal candle there that was posted, and prices have continued to move higher. I think if you are looking for a trade on that, they'll probably look to trade the range still. So buy at the lower end, sell at the top end. And hopefully that continues to work, because when you do get a nice range that's in play, and if you can call it nicely and start selling at the top end and buying at the bottom, these things can go on for a significant period of time, and they can produce pretty good trading results from that. Let's take a look at sterling yen. That was the other request. And again, take a look at the daily chart and just have a look at how things are shaping up here. So we've seen what looks to be some sort of top formation take place here. We were trading within a range between 169.09 to 163.06. We saw this level act as resistance on a number of occasions before finally breaking with this huge impulsive candle that we posted on the 20th of December, following that intervention from the Bank of Japan. And since then, prices have been pretty subdued. We did hit the target of this range, so we projected the value of the range lower, down to 157.00. Pretty much hit that, and then prices have reversed, posting this kind of doji type candle here, and then prices have accelerated higher. So what do I think on this one? Well, I'm not too sure, to be honest. It's hit the target. I still think maybe the pressure is on the downside with this one for the time being. If we take a look at the 4-hour, just to see if there's any particular levels of interest, we've got this low here that was posted on the 11th of November, which remains untested and unchallenged. So we saw this big breakdown through here, as we know, on the 20th. So maybe a retest of that level would provide a reasonable opportunity to get short. But there is also the potential that we could be in the process of forming some sort of bottom here. It's very speculative at the moment, but maybe what we are forming here is something along the lines of this. I don't want to force it too much, but maybe we'll get some sort of rally up to this region before then correcting again to form some sort of bottom in the short term. Highly speculative, but it just does appear that maybe price action is starting to round off a little bit, and that's what we like to see when bottoms are taking shape. So a little bit mixed on those for me. I don't know if you're seeing anything different, but it takes two opinions to make a market. But that's just my take on things as I see it right now.
Excellent. Thanks, Joe.
No worries. Any other requests coming in?
I have refreshed, and it seems to sort of like be coming through now. I don't know what. So you have to refresh once or something, because
I refreshed throughout just
okay,
to
all
make
right.
sure, which is a bit frustrating. But maybe we'll get onto our contacts at TradingView and see if they can help us out with that.
Yeah.
Okay, come to the head challenge, Steve. So this has accelerated a bit. Previously, we'd been coming up with these trade ideas and following them hypothetically or on a simulated basis, but now we've actually opened up a live account and started trading these for real. So just for refreshing the memory for anybody that's new here, basically, Steve and I pick trade ideas live on the video as if we had a gun to our head. What would we trade right now? We must come up with trade ideas that have stops and targets and risk reward ratios that are better than 2 to 1. We place these at market, and these trade ideas will expire at 9 p.m. or when the stops or the targets are hit. So we'll close them out at 9 p.m. regardless of the outcome. Now we've opened up a live trading account with Owanda, which are actually one of our clients. So, we feel they're a pretty reputable broker, or very reputable broker. They're regulated by the FCA as our signal center. So, they're a pretty good bet for us, I think, as a venue for us to trade through. Would you agree, Steve?
Yeah, exactly. I mean, that's, we don't get anything for advertising. Obviously, we don't want to advertise on here. We're just sort of like giving you our opinion on, the markets. And also, if you ask a question, someone's asked a question about which broker to open an account with. And what we just say is, like, make sure they're regulated. You've got, as a retail client, you'll get a certain amount of protection from regulated brokers, and it's really important. And to have that protection, there's so many sort of like stooges and bad guys out there. We're good guys. We sort of like, Owanda seems to be sort of like, we're trying this for the first time live, obviously live account, live trade ideas, gun to head, really scary, non-farm payroll. Oh my God, what are we going to do? So yeah, how did we get on yesterday, Joe?
I
Although
don't
I
know.
do
Can you
sort of
see
know.
the trading panel? Just so we can sort of have a look at that. I mean, I know
Yeah,
that we had
we had a
we
bit
had
of
a
an
trade.
issue, didn't we?
We did, yeah. We had a trade on Euro Sterling, which was 5.7 pips on side, 0.24R. And you had a short on DAX, which you were off 12.7 pips or down 0.19R. We had tried to set up an expert advisor because all of this information is traded on an MT4 platform that basically closed out the ideas for us automatically at 9 p.m., which it didn't actually work. So we need to have a play around with that today. So Steve closed his trade out a bit later than 9 p.m., but I don't think it made too much difference, did it?
It did make a difference, Joe.
Oh,
You
did
wouldn't
it?
believe it, would you? Yes, it did. I was slightly offside at 9 o'clock, but then when the market opened up at 12:15, and I had to sort of like stay awake till then because I was very nervous, obviously. Then we sort of it was a little bit higher. I ended up closing out at 14,475 instead of 14,465, so I lost a little bit more. I think I was down about 79p, and I lost £3.38. So yeah, a little bit annoying that the EA didn't work. That'll teach us. But Joe, you did okay. You ended up £4.71 on side. So that's
Yeah.
overall sort of like not too bad. What is that? A quarter of an hour?
Yeah, so I'm not sure what. Well,
Overall,
he's up £1.26. So we've got a
yeah.
£2,000 live account here. So just starting off with small numbers, and we're risking 1% each. So each of us risk 1% of that capital on a daily basis with our gun to the head trade. So Steve, let's go again, shall we? If I call out my idea, do you want to enter it?
Yeah, sure,
Is that
yeah.
how we're going to do it?
Yeah, why
Okay.
not?
Okay, right. I mean, it's scary today, obviously, because we've got non-farm payrolls. We are expecting fairly substantial volatility on anything linked to predominantly the US dollar, but everything can be dragged into to this. So let's take a look. I'm going to go with, scary. I'm going to go with dollar yen. And this is the reason why. So the daily chart, as we mentioned, it's trading within a bearish channel, and we are trying to break out of that channel at the moment, but we've got a pretty stiff area of resistance, which is highlighted here by this black line. So we've got the wick of this candle here from the 14th of December, pretty much the midpoint also of this Marubozu candle that we posted. Let's just see actually where that is. So the 50% level is just a little bit lower, but we can see prices rallied into this level on a couple of occasions here, and we're going for a third attempt now at trying to break through that level. So what I'm hoping to see is that this maybe will fail, and we'll see prices continue to move lower within the bearish channel. It's highly speculative, as all these trades are, but let's get this trade on, shall we? So I'm going to sell at the current price of 134.35. My target will be the previous lows that we reached, which will be 129.80. And now I'm going to have to give myself a bit of room on this stop. And I'm going to go just there at 136.08. So that is a 2.64 risk reward ratio on dollar yen. Is that giving you enough information and time, Steve, to get that on?
Does this look right to you, Joe? Selling it here.
Make sure we're risking 1%.
Risking 1%. It's coming up with $20 risk, just over, because we've not much.
So
And
136.08 is the stop. That's
yeah,
the main level.
136.08, 129. Well, no, the main level's a take profit level, Joe.
Well,
So
I always go risk first. So I want to protect myself first and foremost going into a trade. If I get to hit a target, that would be a bonus. But yeah, protecting risk is always the most important thing. So that's live on the chart.
Yeah.
I'll also get it posted up to the TradingView profile as well, which I didn't do yesterday. Slap on the wrist for me. Anybody wants to check those out, feel free to do so. Over to you, Steve.
Yeah, you know what? So you're going for dollar weakness, and I'm sort of like looking at gold, and I'm sort of thinking we're forming a bit of a top, and maybe, like you said, that corrective rally in dollar, has it got a little bit more legs? That's what I'm thinking. So I'm a little bit either way really on this. Let me just get rid of this chart over here. Yeah, so I'm looking at maybe, are we forming a bit of a head and shoulders from here? Left shoulder, neckline, head, right shoulder. Sorry, neckline, right shoulder. Are we doing that, Joe? That's what I'm sort of thinking. So yeah, I'm going to go and sell this bad boy. Let me draw it on the chart first. Short position here, and then I'll try and put the trade on. I need to give it a bit of room. 1847.62. It's always the same with non-farm payroll. I think we'll give it a little bit more room than that. And look for a little bit on the downside. This is what I'm thinking. A little bit of a break lower. Let's hope we close it out on time, Joe. I don't want to be running this bad boy over the weekend. Giving it a little bit of room to the upside. I'm going to go and put this trade on now. Trade, create new order. I want to sell it at market. Take profit to profit. I want to risk 1%, not 6%. And put my stop at 1849.62. And I want to target 1801.62. So we need to get this. Oh, what are we doing? We want to risk 1%, Joe. That's not. Why is that not working? That's close to 1%. 1.03%.
Lot sizes that we discussed yesterday. Maybe
yeah, sometimes the lot sizes don't really work out. I don't know if you can do fractions in here. No, it has to be a round number. So it's going to create a little bit of an issue.
How much are you risking?
Oh, there you go. I'm risking 1% if I go there. So my stop is at 1849.2. Oh, it's moving about, Joe. Why does it keep moving about? So I'm selling 2 gold on this platform around about 1837.24. The stop's at 1849.12, targeting 1801.54. So do that there, and we're in. So let me just adjust those levels. There we go. That's the bad boy.
Okay.
Something like that anyway.
So we've got the trades on there. Steve looking for dollar strength. I'm looking for a bit of dollar weakness. I know that's contrary to what I was saying earlier in the show with my analysis on dollar index. I do think we are in corrective mode to the upside with the US dollar, but just noticed that there was a fairly decent level of resistance there to target. Obviously, anything can happen on non-farm payroll days, so it could be a very interesting one indeed. So there's the 2 trades on. We published them up to our profile and we're running them live. So let's see what happens on Monday with those. Let's look at the day ahead then. So we've been building up to it throughout the whole show. We've got a few data points out today. First up, we actually have Eurozone consumer prices. So this is the latest read on inflation in the Eurozone. So that'll be well watched. As we know, these inflation numbers at the moment are very market moving, so that could indeed be the case again here. Then at 1:30 we have two numbers out. We have the US employment report, or the non-farm payroll number. We also have the Canadian employment report due out at the same time, so expect significant volatility in anything linked to the US dollar and the Canadian dollar. And then swiftly following that up, we've got the US ISM services index, which is due out at 3 o'clock. Again, could be a big market moving number. The expectations there, we'll have to obviously check those out and what they are, and make sure you're aware of those numbers when they come out later, and don't just get stuck staring at the screen following non-farm payroll, because it could be followed up with another wave of volatility shortly after.
Could actually do a show later this afternoon, Joe, around non-farm. Why don't we just
might.
come on?
Should
Just
we do
for sort
5
of
minutes over non-farm payroll? 10 minutes?
We can maybe squeeze 10, yeah.
Yeah, all right. Let's do that. Okay, then on to next week. In terms of data, the only high impact one that we've got that we're bringing attention to at the moment is the US consumer prices, which is due out next Thursday. So that's the latest read on inflation in the US. Again, will be very important, given that the Federal Reserve are keeping a very close watch on this to make sense of their policies over the coming weeks and months, and decide what to do with interest rates in order to cool off the inflationary environment that we're currently in. So yeah, let's jump on the video around 5 minutes before non-farm payrolls later today. Let's watch the fallout from that, and we can follow up our price on our trades as well, Steve.
Yeah, lovely.
Great. Okay, everybody, thank you very much for watching and participating. We will see you this afternoon if you want to join us. If not, we will catch you on Monday. Have a great weekend.
Cheers.
Bye-bye.